All right, let's dive right into this explainer and really unpack the massive, kind of complex landscape of quantum computing investments. I mean, we're talking about something that could legitimately define the next massive tech cycle. We are standing on the very edge of a fundamental shift in computing power. But let's be real, separating the genuine scientific breakthroughs from the sheer, unfiltered hype, that is a serious challenge.
Now, what's genuinely fascinating here is the reality behind this question. We aren't talking in hypotheticals. We're talking about a specific, real-world stock that sat there almost entirely unnoticed back in September of 2023, right before absolutely exploding in value. That stock shot up over 2,000%. To put that into perspective, a $10,000 investment in that sub-dollar stock at that exact moment, it would be worth over $224,000 today. Now look, I'm not bringing this up to induce any hindsight panic, right? I'm bringing it up because this receipt perfectly sets up exactly why we desperately need a structured, logical framework before making any decisions in this space.
So here's our agenda for today. 1. The quantum investing mindset. 2. 4 quantum hardware architectures. 3. Mapping the quantum players. 4. The infrastructure toll collectors. And 5. Calibrating your quantum portfolio.
Section 1. The Quantum Investing Mindset. Building your baseline before committing capital.
Okay, before we even think about looking at a single ticker symbol, we've got to establish some ground rules to protect ourselves from that emotional FOMO. And to do that, we really need to understand a concept called the Woodshed Signal. Think of it like a musician, right? Anyone can just step on stage. But if you've been practicing in the woodshed for years, totally out of sight, that rigorous preparation becomes undeniably built into your performance. It's literally impossible to fake. Finding these companies in their woodshed phase, when they're quietly preparing, booking real revenue, and building systems way before the massive, Nvidia-fueled market announcements, well, that is where the real fundamental value lies.
So the crucial point here is that you have to pair that signal with what mathematics calls the 37% rule. Basically, before you commit to any major decision, you should spend the first 37% of your time strictly observing. You've got to learn what good actually looks like first. This explainer, right now, serves as your 37% observation phase. We're giving you the mental framework you need to objectively evaluate the entire board.
Section 2. 4 quantum hardware architectures. There is more than one way to build a quantum computer. You know, there's this massive misconception floating around that quantum computing is just one single type of technology. But in reality, you're no longer forced to just bet on one single approach. We've got superconducting systems using circuits and annealing, trapped ion, which literally holds individual atoms using electromagnetic fields, neutral atom, which offers these massive scaling advantages without extreme cooling, and photonic, running operations at room temperature using light. And here's the kicker. For the first time ever, all 4 of these distinct technologies are publicly investable. Let's actually look at the leading players driving these architectures. In superconducting, D-Wave saw a 179% year-over-year revenue growth. And get this, they booked more in 2 months than all of their 2025 revenue. Plus, they just acquired gate model capability, targeting 49 qubits by 2027. Then, in trapped ion, IonQ multiplied their $77 million backlog by 5, and they're pushing a massive $1.8 billion acquisition of Skywater Tech to own their entire manufacturing process right on U.S. soil. Then we have the newer entrants. Inflection, using neutral atom tech, was chosen not once but twice by Nvidia for quantum programs. They already boast $32 million in revenue from both computing and sensing hardware, some of which, believe it or not, is actually deployed on the International Space Station right now. And in Photonic, Xanadu's room temperature Aurora system is paired with their Penny Lane open source software. That software gets 160,000 monthly downloads, capturing half of all quantum developers worldwide. I mean, the advancements across the board are just staggering. Moving on to Section 3. Mapping the quantum players, navigating risks, traps, and upcoming massive public offerings. As this market explodes from just 4 pure plays 6 months ago to 7 today, we have got to look very closely at the extreme risks hiding just beneath the surface. Take the severe short seller allegation, for example, regarding Quantum Computing Inc. When you combine accusations of overstating NASA relationships with the fact that they only project $682,000 in 2025 revenue, and they carry a major ongoing warning on their 10K financial report, well, it highlights exactly why you must keep your head on a swivel. Not every company in this space is a winner, guys. Some carry extreme existential risk. We're also seeing significant hurdles elsewhere. Take Rigetti, for instance. 63% of their 2026 revenue is tied to just two specific government contracts, and those delivery timelines have already slipped to the second half of the year. Hardware delays are kind of par for the course here. But on the flip side, the investable universe is expanding with some really fascinating niche players. Horizon Quantum is closing a SPAC in March 2026, building hardware-agnostic middleware, meaning they win no matter which architecture takes off. And then you have microcaps like CLSQ building post-quantum encryption chips, and ARC focusing on quantum-safe key distribution. And looking just ahead, the pipeline is absolutely exploding with major global IPOs. Quantinuum just filed their confidential paperwork for a massive $20 billion public offering targeted for January 2026. That is going to be a tectonic shift. Add to that IQM's $1.88 billion Finland SPAC in June and Pascal's $2 billion France SPAC in the second half of 2026. This completely changes how we have to think about building a sector portfolio moving forward. Section 4. The infrastructure toll collectors. The giants who win no matter which architecture succeeds. All right, let's step back from the pure play builders for a second and look at what is arguably the safest layer of this entire ecosystem. These tech titans are the true toll collectors. Amazon Web Services already hosts 5 different quantum hardware providers on a single cloud platform. Microsoft Azure natively hosts 4, and Nvidia, their software integrates with 75% of the world's quantum processors, and they've pumped $1.8 billion into backing Quantum Kira and SI Quantum. Here's the beauty of this layer. These companies already generate massive, world-changing cash flow. They absolutely do not need quantum computing to survive. But when this industry successfully scales, they collect a fee regardless of who builds the best computer. Section 5. Calibrating your quantum portfolio from emotional FOMO to a structured allocation. To actually put all this data into practice, we first have to recognize a profound psychological shift happening in the market right now. Think back 6 months ago. The collective fear around quantum was simple. What if it doesn't work, and they just burn through all their cash? But look at the fear today. It has completely flipped to, what if it works, and I'm not in it? The uncertainty and the risks are exactly the same, but human emotion has entirely reversed direction. If you can feel this exact shift in yourself, that urgent, burning FOMO to jump in just because everyone else is, treat it as an immediate pause signal. It's time to step back and review that 37% baseline we just built. So how do we logically apply this? Well, based on the rapidly expanded market today, a balanced, hypothetical $100 allocation strategy anchors heavily in safety. We allocate $50 directly to the infrastructure layer, those cash-flowing toll collectors we just talked about. Then $35 goes into the pure play builders, weighting them for outsized returns if commercialization actually hits. Finally, we set a strict limit of $15 for the speculative penny dreamers. A breakthrough there could multiply your money, sure, but the risk of losing it all is very, very real. Because you must always keep in mind the harsh reality of early-stage hardware. Cash burn and share dilution are pretty much inevitable. These pure play companies are issuing shares just to survive their development phase. Now, if managing that individual risk feels a bit too heavy, ETFs offer a fantastic alternative. You can consider a basket like the Defiance Quantum ETF, which sits alongside 5 newly launched quantum funds. That way, you get the broad exposure without having to blindly pick a single winning architecture. As you reflect on the diverse architectures, the incredible scientific leaps, and that massive incoming wave of IPOs we've explored today, you have to leave the hype at the door. You now have the baseline, so I'll leave you with this one final thought to ponder. The next time a massive quantum headline breaks, ask yourself, is your quantum decision going to be calibrated? Or is it just going to be emotional?